India has been moving towards assimilating opportunities which have been coming out from maybe guardrails which have come around of regulators. There have been evolution of businesses which have come together. And over a period of time, there have been these opportunities somebody need to provide a solution for. So that is where the crux of private credit market has always been. India, as I mentioned, is not immune to these developments. Over a period of time, the growth in Indian economy and over a period of time, which is 75 years back, if you go back to that era, from 75 years to today, there has been a good growth which we have achieved. I think the GDP numbers, the economy growth is testament to that fact. But once you squeeze it even for the last 10 years, it is a fantastic growth story. And if you even skews this between another 5 to 3 years, it is actually a tremendous story that we have reached. Now, while there is a growth in economy, there is a momentum which has been developed, there will always be macro factors which will come in. So we do see the evolution of macro factors and we identify them based on our domestic demands. But to be precise, we have a great demographic dividend which we have achieved over a period of time.
Yes.
Now there is a time where we actually identified this period to be present, providing solutions, not only solutions to businessmen who are there to identify requirements of our internal economic situations. And these are in most of the cases independent of what is happening globally. While there will always be global factors which will influence, but if you see the rate scenarios, if you see the demand which have been coming, I think
Yes.
India has been at a sweet spot. And in this sweet spot, solutions are requirements which are non-dilutive in nature. There are solutions which are for investors who have evolved and are discerning over a period of time. And in the
Yes.
last 4 to 5 years, we have seen enough and more demand coming from domestic investors, which are HNIs, family offices, and that too insurance agencies and institutions, which have looked very actively into sector of private credit.
Saurabh, so is a cyclical growth trend of in and around 6% enough to really generate real returns for private credit investors?
Shri, this is an interesting point that you have raised. When we look into this market, return on capital employed between 18 to 24% is typically how a credit market investor will look into. And somebody beyond 18% is really a solution akin to equity. Something below 18% is something which is a solution being non-dilutive in nature. A 6% at an overall perspective make perspective grow for economy, but there will always be spaces in the economy which will go beyond the anticipated 6 to 7%, and these will be really non-traditional ways of growth. So it will be acquisition financing, it will be probably reorganization of capital structures of company. There could be situations where we have seen businesses coming out from this old thought process of maintaining a maybe a few $1 million size and profitability to grow to a certain scale. So as I mentioned earlier, demand is paramount. And once the demand is paramount, there is always requirement of specialized credit. So 6% growth on the economy definitely is positive. But on top of this, there will be sectors specifically where we will find growth parameters which are required for people like us entering into the space and providing return to the investors.
Thank you, Saurabh, for raising that. And that segues perfectly to my next question about the sectoral opportunities that are perhaps unlocked by the Digital India government initiatives like UPI, DigiLocker e-hospitals. We were talking about this yesterday with a guest. So how much of a driver for private credit markets are these government-backed initiatives and vehicles, in fact, like India's National Investment and Infrastructure Fund, also backed by global investors like Abu Dhabi Investment Authority, planning to raise up to $2 billion for its latest private credit fund. Do we look to, or do private credit investors look to government initiatives to really unlock value and opportunities?
Absolutely, Sri. I think this is important because this is actually a same pot where everybody is operating. While policy making gives a vision, and once you are aligned with the vision, you have a perspective. In that thought process, we have always been looking up to how the policies are shaping up, how things are evolving, and not only us, you think about the businessmen who actually are maybe entrepreneurs, could be first generation, could be a third generation entrepreneur whose family office or his generations now really want to venture into new initiatives. Now, those are all driven by policy making. Now, once the policy making is visibly potent and there is a visible upside which actually comes out from a vision which is stable, those two are key pillars for any growth in any type of market. Now, private credit is again no stranger to these type of growth. And not only this, you would have sitting at your offices, you have definitely seen a lot of money flowing towards India. The size of India's private credit market have enhanced. Now, not only it has enhanced, the type of market have even evolved. There was in global arena, if you would have seen, there have been many verticals of private credit market where India has been seeing this growth over a period of last 4 to 5 years only. Now, in these 4 to 5 years, we have actually identified not only sectors which are into venture capital debts, which are early stage investments. There could be a dilutive investment, which could be probably a private credit, which in a special situation. But there is also a large market which has grown, which is on the performing credit. Now, these are those sectors and those investments which are below 18%. And we have actually identified policymakers to get into sectors and companies which really solve for profit making with a certain upside. Now, in that context, government policies are important, businessmen's endeavors are important, and then there is someone who has to provide solution. So if you club all these three dimensions, we will identify a play where it is win-win situation for all the three, the government and the economy, the investors, as well as the players like us.